Australia's central bank has raised interest rates at its first meeting of the year as expected, and the RBA trying to stamp out an unexpected revival in inflation. Reserve Bank of Australia lifted its cash rate by a quarter percentage point to 3.35%. That is the highest since September 2012, and this is the fourth successive quarter point rate hike. The increase comes amid signs of weaker hiring and household spending. RBA says that further rate hikes would be needed in the months ahead to cope with inflation, and it expects inflation to ease to the top end of its target of 2 to 3% by mid-2025. Consumer inflation reached a more than three-decade high of almost 8% in the last quarter of 2022. The big drivers for the price of food, electricity and rent. RBA had raised interest rates by a total of 300 basis points before today's decision. These hikes have driven a downturn in the housing market that's beginning to weigh on broader activity. Well, at the cost of living, a talking point in Australia's parliament, lawmakers say inflation remains unacceptably high.
It will hang around for longer than we'd like, but there is growing evidence that inflation is expected to have peaked in our economy and is now beginning to moderate. Our job, the responsibility that we take, is to do what we can to address these inflationary pressures in our economy and to take the pressure off Australians where we responsibly can.
One economist says that Australia's housing market could decline by 20% as interest rates rise.
The poster child almost of the tightening cycle in Australia has really been so far the housing market. We've seen that's probably been the most sensitive sector to interest rate hikes. We're expecting peak to trough declines in that sector of just under 20% nationally, which is an incredible decline. And so that picture doesn't materially change, given that we're expecting that the RBA may go a little bit further with rate hikes. The underlying picture is still for a slowdown. So it doesn't materially change. What's going to be really interesting to see is, and the key question is, how consumers and more broadly businesses as well respond to the ongoing monetary tightening.